What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and the trading method we use can be implemented with any company that's traded in the US stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to all those who continue to tune in. Give those thumbs up. And if you're not already subscribed, make sure you hit that subscribe button and also hit that notification bell as well. That way you are alerted when we release new videos. We do release bonus content from time to time. Now the nightly and weekend videos, like tonight's video, we mostly focus on identifying triggers and targets for trades ranging from scalps and intraday trades up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, the different color coding for different time frames, broadening formations, levels of interest, things of that nature, make sure you check the bonus content out on our YouTube page. We've got a couple of videos on there that dive deeper into that for you. And for more information about the strat, which is the base of our trading and charting method, you can find more free information in the description of this video. So I encourage you to hang with us, watch the full video, because along with just triggers and targets, we also give some pretty good insight into the price action on all different time frames, basically. So with that, let's take a look at the agenda for today. We'll go ahead and start with the recap of the price action from today, Tuesday, November 18th. Then we'll zoom out like we always do and take a look at the week, month, quarter, and year. Then we'll zoom back in to set our 4-hour markers and the triggers and targets for Wednesday, November 19th. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year. All right. So let's go ahead and look at the intraday chart. This is coming from a more of a scalping perspective. What we like to kind of talk about at the beginning of the day, looking for our tried and true method, which is looking for calls when we get higher lows at or above opening print, or looking for puts when we get lower highs at or below opening print. So opening print is obviously the first traded price of the day, and if you get price action to the upside, it maybe pulls back a little bit and you get a higher low, then you want to look into getting calls for the upside, targeting the overnight high and previous high a day as your targets. Now, if you get the opening print and price action to the downside, maybe a bounce back up, but it falls short and you get a lower high at or below that opening print level, then you want to look to get into puts, targeting the overnight low and previous low a day to the downside. Now, we can see we had a very small gap down, right? So basically opened at previous low a day. And you can see there was a little bit of a push to the upside. And if you look on the 1 minute, you will see a lower high right here. And that kicks that move off to the downside. Now, if you tuned in yesterday, then you know that we had swung puts overnight. So we didn't have to worry about getting in on that 1 minute time frame. But if you didn't swing overnight, if we look at that, let's go ahead and just go to that 1 minute. There is a lower high. Oops. Let's get this part. There's a lower high here, essentially, right? So you have your high of the day at that point, a lower high here, higher low, slight higher high, but then you get that lower low. So it created like a broadening formation here, right? Boom. Oops. And then you get the lower high here, and then it's off to the races to the downside. Lower high here, lower high, and you continue to press down, right? So let's go back to the 5 minute chart here, and we can see, let's remove those broadening formations, right? And we can see that we had basically a kind of like a double bottom here on the market maker's expected move low. We talked about all of these, basically we'll call them honorable mention levels here in the chart, right? So obviously we know previous low a day, that's one of the 4-hour markers, but that basically coincided with last quarter's high, which is this solid yellow line here at 35.49. We have the last week's low here at 35.15. We've got the quarter flip right here at 34.17. So price above that level and the quarter is green, price below and the quarter is red. We've also got last month's low right here at 33.98. And the market maker's expected move low at 33.40, as well as the 50% fib extension for the bull flag from the April low. So like we talked about yesterday, this whole 35 to 34, 33.50 area was going to be just kind of a support area that needed to be broken through if we're going to see further action to the downside to that was a 29 level basically, right? So you can see why we got the chop here, the push down, then the push back up, then the push back down at the end of the day. So essentially overall it's chop, and that's because we're in the support zone, and bulls and bears are fighting, and going to see who's going to take over, right? You can see the quarter flip is right here. If we flip the quarter red, then we've got the week, the month, and the quarter red, right? So showing more strength from the bears in that case. It would also put us solidly in the two down, well, not solidly, but in force with the two down on the month, right? If we go below last month's low, that's a two down, and that could, it's at least marked a higher high at this point from the previous high. But now we've got to see, are we going to make a broadening formation, making a lower low, or are we going to make that higher low to continue the uptrend from a month perspective, right? You can see that price came down, basically bounced almost to the cent off of that 50% fib extension of that bull flag from the April low, found the real support on the market maker's expected move low. Again, doesn't mean that price has to bounce here, but we're seeing that respected this week. Caught the real support here, right? These on like the 15-minute were more considered like wicks, right? And this is the body of the candle. So found the real support at last month's low, or other words, the quarter flip, right? That level is basically the same, and then pushed up from there. Now, we did get a rejection of the of last quarter's high, right? So that was acting as support previously, and we broke through it, and now we're coming back up, and it's acting as resistance. Now, the good news is we've got some decent support off of last month's low and the quarter flip. So we'll see if we can, get back to turning this resistance into support, poke back above it, make it support. But as of right now, it is resistance, right? So that's what we have from more of a scalping perspective. If we look at the 1 hour chart, let's make this a little more clear for us here, right? We can see that there was a lower high here, lower high here. This high was still lower than this high, so that continued this downtrend. We're getting lows, lower lows, lower lows, lower lows, lower lows, another lower high, lower low, looks like a lower high here, and we've got to see what's happening with that hour. So if we can get a higher low, like we did here, this is a soft higher low, right? But we got the low there, we pushed up, and we got a soft higher low and continued to push up, but seeing that rejection here at last week's low. But for right now, if the 1 hour can put in a higher low and then a higher high, now we're looking at possibly reversing the trend, at least on the short term perspective for the 1 hour, and at the very least trying to put in a lower high on the 4 hour, right? If we take a look at the 4 hour, we're still a ways away from any type of lower high being put in, right? The last lower high is up here around 40.34, and we're down here at 35.50. So actually 34.35 was the close price today. So we're a long ways away from making even a higher high on the week perspective. I'm sorry, on the 4 hour perspective, which would give us like a broadening formation, right? If we can pop up and get a higher high, then we've got this broadening formation and a little bit more defined zone to be trading in going forward. But as of right now, on the 4 hour, still in that downtrend, not even close to reversing the trend. So we've got to look for that higher low, higher high on the 1 hour if we're going to have any hope of bouncing, right? Let's go ahead and look at the day chart, right? Again, nothing too surprising here. Let's make this a little bigger for those on phone, right? So we've got the lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low. So in a full downtrend on the day chart as well, right? So 1 hour through the day, we're in a downtrend. The week is kind of well, it's neutralizing. I wouldn't call it neutralized to bearish at this point, but it's neutralized or neutralizing, and we've got to see where that turns out. But on the intraday, we're not short term. We're not looking like a reversal at this point in time. So we did again swing some more puts. They not for next week this time. We swung them for December. Noticing that we are at a level of support, right? And we could push down to that 29 level, but it's very reasonable that we could see support here and a continued bounce. So that's why we chose the December puts. Give us a little bit more time to work with, a little less theta. Of course, the delta is going to be a little bit lower, but again, it's more about just having time with the trade than being right now. I would think that we would be more prone to a bounce than a continued drop from a short-term perspective, right? Again, even if it's only to put in a lower high on the 4-hour, I do think that we will have some upward pressure on price action. We've got Nvidia earnings coming up, so this could be the bottom, but we do have our options open, and we do know that 29 area is another clear area of support, right? That was the top of the 11-week range that we were in from June to September, right? So that's what we've got from the day and below perspective. Let's go ahead and zoom out a little bit. Let's look at the week. Let's get a cleaner chart here. Excuse me. And we can see on the week, right, here's our bull flag. Here's the flagpole here. Here's the flag. And we've got the push up past the 100% fib extension all the way up to the 132 fib extension, essentially. And so now it's trying to, in my opinion, it would be considered more bullish consolidation, just because, again, we haven't made a lower low or put in a lower high yet, right? So we're neutralized, we're consolidating, we're digesting the big push up that we've had from the September. Excuse me, the breakout of the flag in September. So we're just kind of digesting that. Again, we've got a lot of room. Let's make a little clearer chart, right? We've got a lot of room to put in a lower high. We can get in, a higher low. We can come all the way down to this 2350 level before we're setting a lower low. So we're still all right. Again, we're neutralized. We're neutralizing, but we're not bearish in any sense, right? So if you're familiar with this channel, this is nothing new to you. If you are not familiar with this channel, then just take things calmly. We've seen a couple weeks of downside action, but look at the upside action that we've had since April. So nothing to panic about. Now on the month, we did tick 2 down on the month, right? So we've locked this. What was it? October. Sorry, drew a blank there. We've locked up October in as a higher high in the trend count. Now we just got to see where we're gonna bottom out here to make the higher low from the month perspective. That is what I do expect, but we can't take off the board that we could just push down through the rest of the year and the beginning of 2026 and maybe make a lower low on the month perspective, and this would just be a broadening formation, right? So again, nothing to really panic about. We're not really breaking down. Yes, we went 2 down. Pretty big pullback, right, in that sense, but we still have not set any type of a lower low or even lower high. So again, neutralizing, but we're still leaning more bullish than bearish from a long-term perspective. As you can see from the quarter, this is looking a little thinner than what we started out with in the quarter, but we're back. We're back below that 36.15 level, so we're no longer in force with the 1 combo 2 down, combo 2 up, right? That magnitude of that move was 70.08, so we didn't quite make it there with that move. But again, pullback, not the craziest thing in the world. Now, we do want to continue to watch this, because if we finish like this at the end of the year, it makes it much easier for us to go 2 down in the first quarter of 2026. And if we do that, we lock this in. We lock the fourth quarter of 2025 in as a lower high, right? So we have a high here. We've already made a lower low. Now, if we make a lower high, that starts a downtrend on the quarter perspective. So again, we haven't broken down yet, and the quarter's we've still got a month and a half left in the quarter. So nothing to panic about here. Just something we want to continue to keep our eye on. Because it could help guide us here at the beginning of 2026, right? Or give us a better idea of what may happen at the beginning of 2026. All right, and on the year, still green, still, I would say a little bit fatter than just a straight up doji, right, on the year. But we have pulled back, just like with all the other charts, right? At the same time, we've created a lower high, right? Started the year off with the 1, 2 up, 2 down, right? The magnitude of that move was $6.21. We only made it to 723. So from that standpoint, we've set a higher low, and we just want to continue to push up through the rest of the year. Now, if the year flips red, that means we're full time frame continuity to the downside. The month, week, month, quarter, and year would all be red at that point. And the bears will be more handily in control. And then if we do fall below that 2350 level, the 1, 2 up, 2 down is actually back in force. So we do need to watch out for that. But again, neutral at worst. I'm not ready to start putting in long-term bear theses or anything like that. Yes, the short term is in a downtrend, but the long term at worst is neutral. So those are our thoughts here on the this is more zoomed out time frame, right? Just want to make sure we stay level set. Yes, we've had a couple of weeks of pullback, but it's not the end of the world, right? Let's go ahead and zoom back in here and look at our 4-hour markers for Wednesday, November 19th. We'll go ahead and bring out the 5-minute chart again and just identify the 4-hour markers on the chart, right? So up at the top of the chart, we've got previous high of day at 36.01. At the bottom of the chart, we've got previous low of day at 33.15. Then we've got the overnight high at 35.12, overnight low at 33.63. Now, overnight low and overnight high are almost guaranteed to change before price actually opens on Monday. But let's just say that's where they are when price opens on Monday. And let's say on Monday. Why am I saying Monday? On Wednesday. Let's say on Wednesday, November 19th, that this is the overnight high and this is the overnight low. And we open in the middle of that range, right? Basically unchanged from Tuesday, right? If we were to open at that level, this is part of the repeatable and proven strategy, right? First things first, we want to look to see where price goes. If we open and we push up and then we get some type of pullback, do we get a higher low? If we get a higher low at or above that opening print level, we want to look to get into calls. Our first target is going to be overnight high. Second target is going to be previous high a day, right? Same thing on the other side. If we open here, we push down, maybe we bounce off of last month's low or even overnight low and we push back up, we get a lower high. We want to go ahead and enter puts. First target being overnight low, second target being previous low a day, right? Now, if you get past previous low a day, previous high a day, well, you can look at the 4-hour and 1-day triggers and targets, which we'll get to here in a second. But just the main thing to understand, the very simple rules, higher lows at or above opening print, calls. Lower highs at or below opening print, puts. And this doesn't mean you're going to make bank from it every day. You may make a small amount of profit, right? You may even take a small loss. If, say, we get a higher low and we push up, but then things reverse, some news comes out or something like that, and we just drop out, right? You've got your stop set up. You either stop out at even or maybe even take a slight loss. In the end, that's okay because it's better than, number one, it's better than a big loss. But number two, you were in position where the risk to reward was in your favor to make some profit, right? So some days we get that huge profit, a big trending day pushing up or pushing down. Some days we get sideways action. Some days we get a reversal of action. So this is just a repeatable strategy that if you just follow the rules, you're going to come out on top, right? Especially if you've got your stop set, because you're going to be taking small losses if you do take a loss, and then those small losses are not going to take away from the small wins plus big wins that you get on the positive side, right? So let's go ahead and talk about the longer day trade type of trade, and we'll switch to the 4-hour chart to do that. We can see that from a strat perspective, we've got a 2 and then a 1, an inside candle, so 2 down and then a 1. So if we there we go. Let's make it bigger for people on phone. There we go. So if we do get price action to the downside in the first 4-hour candle of Wednesday, right, that would trigger a 2, 1, 2 down, triggering at the low of the 1, targeting the low of the 2, right? So you would enter at 34.28 and the target would be 33.15. So not a huge magnitude, but something decent to work with, especially if you got multiple contracts and you're at the money or in the money. The upside has a lot less magnitude to work with, right? You would get a 2, 1, 2 up reversal, and that would trigger at 35.78. But of course, the target would be 36.01. So again, not as much magnitude, But again, once you get to those levels, you would be looking at your next targets on the day chart, right? This is the 4-hour chart. If we go ahead and switch to the day chart, all right, we've got a possible 1 2 down 2 up setup. Oops, for Wednesday, right? Monday was an inside day. Tuesday was a 2 down. Kind of hammered up. It wasn't a green hammer, but it kind of hammered up, showing that, you know, the bulls were getting a little bit of kind of winning here, right? Push things back up. Now the end of the day did push back down and kind of neutralize where the middle of the day was, or finish where the middle of the price action was for the day. But again, it kind of hammered up. So we could get this 1 2 down 2 up. If that does trigger, that triggers at the high of Tuesday, which is 36.01. And the magnitude of the move is not the high of the 1, but the high of the candle to the left of the 1. So that would trigger at 36.01, and we would be shooting up here for a target of, what's this, $40.60, right? Just above last week's 50% level, right? Now, if we get further price action to the downside, that's just a 2 down continuation, triggering at 33.15, and we're looking at things like the top of this gap here as possible bounce points. We've talked about on multiple occasions how the tops or bottoms of gaps can be bounce or rejection points, at least intraday. So for tomorrow, that could be a bounce point. If we do go ahead and fill that gap, we've got the 38.2 fib extension of the April bull flag down here at 30.68. So those would be our targets from the day perspective. And then if we continue to push through that, we want to look for support at last quarter's 50% level. All right. So let's go over here to our notes and just look at the hard numbers, right? For Wednesday, November 19th, there will be 28 trading days left in 2025, and the close on Tuesday, November 18th was 34.35. We know we've got to get to 37.90 to flip the week green. We've got to get to 49.49 to flip the month green. We don't have far to go to flip the quarter red, right? We're basically there. So we go below that 34.17, the quarter flips red. And if we get down to that 28.13 level, now we've got the year red. Okay, that's that full time frame continuity to the downside that we were talking about. Don't want to see that if you're a bull, but if you're a bear, you're oh so close that you can taste it, right? Now we know the market makers expected move for the week is plus or minus $5.46 from the close on Friday, giving us a range of 44.32 to 33.40. If you're not familiar with this market makers expected move number, make sure you check out our weekend video where we dive into this a little bit deeper. We know that where our gaps above and gaps below are, and we know what the tried and true rules of the morning scalp are, you know, looking for higher lows at or above opening print to get into calls, and looking for lower highs at or below opening print to get into puts. So from a scalp perspective, we won't go over that again. But from the 4-hour chart perspective, if we do go to the downside in that first 4 hour of Wednesday, that triggers a 2-1-2 down at 34.28 with the magnitude of 33.15. And then we've got our extended targets here of 32 flat all the way down to 31.25. If we go to the upside, that's a 2-1-2 up reversal, triggering at 35.78. And again, not a lot of magnitude there, 36.01. We do have the extended targets here of 36.84 all the way to 38.04. And that rolls us into our triggers and targets for the day, right? If we go to the downside on the day, that's that's a 2 down. Why did I not put that in? Yeah, that's a 2 down continuation. I apologize for the this should be the first target, and just messed up my targets here. There we go. So again, that would be a 2 down continuation, no reversal there. So we've got a trigger but no magnitude. Triggers at 35.53, and even that I think is wrong. Oh yeah, 33.15. I don't know what's going on with my notes today, but that's 33.15 is our trigger to the downside, right? And that's what it was. I must have mistaken that. Anyways, further trigger targets to the downside, right? If we go below Tuesday's low at 33.15, our extended targets are 34.17, 33.18, and 32.83. Wow. Am I right notes from the right day? Yeah, November 19th. I apologize. I don't know what I did with those downside targets on the day. Let's go over that one more time. So if we go to the downside, that's a 2 down continuation, triggering at 33.15. And we've got a 32.83 as the first target. Let's go back to our chart here, right? 32.83. Don't remember what that was, but let's get our gap close. I could have swore we put these in here, right? So 31.36. Maybe that's what it was. I just put them up there. Anyways, let's get those in there, all right? All right, from the day perspective, one more time. Two down, continuation. Trigger at 33.15. Extended targets of 31.36 and 31.25, which is the gap opening, gap close. And we'll go ahead and just add the 30.68 as well, which is the 38.2 fib. 30.68, there we go. That's the 38.2 fib of the April 7 bull flag, right? So apologies for any confusion on the day chart, right? Let's just continue moving right along. We got our triggers, trigger to the downside, 33.15, extended targets to 31.36, 31.25, which is the gap open, gap close, and then 30.68, right? That's the 38.2 fib extension. Now to the upside, we would have a 2 down, 2 up, trigger at 36.01. Now the magnitude is 40.60 for that move. And I'm sorry, that's actually a 1, 2 down, 2 up. I don't know why. Something happened with my notes. Yeah, 1, 2 down, 2 up. I do know that these targets are correct, right? So 1, 2 down, 2 up on the day, triggers at 36.01. Now it's got a magnitude of 40.60, and again, we're in that face of that uptrend or the downtrend. So we've got some intermediate targets on the way up. 37.90 and 39.26 are possible reversal points for lower highs if we're pushing to the upside in that first to the middle part of the day there on Wednesday. Now we will look at the let's just touch up on these week, month, quarter, and year triggers and targets. Sorry, the mistakes there kind of held me back a little bit from the flow here, but let's get back in the flow. Now in the week, we did trigger this one combo 2 up, combo 2 down. That triggered at 35.15. It does have a magnitude of 34.17. Haven't quite reached that yet, but when we do reach it, that would then trigger a few 2 up, 2 down, combo 2 up, 2 down strat reversals. The first magnitude of the combo 2 up, 2 down would be 33.18, then 32 flat, and 31.25. All right, so we have triggered the 1, 2 up, 2 down on the week, but it doesn't have very far to go for the magnitude. We wanted to see if we're going to trigger these combo 2 up, 2 downs. Now, if we want the week to go green 3 or a bullish engulfing candle, we've got to get price all the way back up to 45.52. We're only 2 days into the week, and SOXL is a very high beta ETF. Again, NVIDIA has earnings. Any other news announcements could act as catalysts. So would I take 45.52 out of the picture? No. We could see that by Friday. If we get 3 straight days of uptrending days, that's easily reachable for SOXL. Right? So I'm not going to take the bullish engulfing candle off of the table. But again, we've got to turn around the 1 hour and the 4 hour at the very least. That way we have some hope of putting in maybe like a higher low on the day if we don't put in a higher high, beforehand. And then once we put in that higher low, looking for that higher high on the day chart. But again, that would take a couple of days. We're waiting for the day chart. We would really have to see just some type of catalyst rocket us off and make us forget about setting a higher low first and just going up to that 45.52 level. So not taking it off the board, but not saying that is going to happen. We're just ready for it if it does. If it does get that level, we're looking for that 46.79 first. That's that 50% level of last year's price action. If we can get above that, then we've got some extended targets. We can take the magnitude off the table because it's not a 2 down, 2 up anymore, but we can leave it on there from the standpoint of we know what that ultimate target would be if we go above 45.52, with some momentum. All right. On the month, again, we have triggered the 2 up, 2 down. That triggered, let's see, 33, and I have my bold wrong, so this should be underlined but not bold, right? So we triggered 33.98, but we were able to push back above, right? We're back at 34.35. So we triggered the 2 up, 2 down. The magnitude for that move is 23.80. that is still quite a ways to go through some pretty big levels of support. So I put that intermediate target of 28.93 on here as well. But we did trigger 2 up, 2 down, and the magnitude is 23.80. So look out for that. Again, we've still got a whole half of the month left to go. Right now, from the quarter perspective, we triggered and completed the 2 down combo 2 up. By reaching that 36.15, and by reaching that 36.15, we did trigger the 1 combo 2 down, combo 2 up. But because we are no longer above that 36.15 level, we're no longer in force, so this is no longer bold, right? It's just underlined right now to remind us that it did trigger. And so we want to continue to watch out for that, because the quarter is a little bit more. We're in a little bit more precarious position with the quarter, right? Because if we do go 2 down in the first quarter of 2026, that would lock in a lower high on the quarter chart, and that's after a lower low. So that would be just basically starting a downtrend from the quarter perspective. So do I think that's going to happen? No, I don't. I think we're going to have a decent push into the end of the year, and we'll see what January 2026 may look like towards the once we get more towards the end of December. But right now, I don't think we're in jeopardy of making the lower high on the quarter perspective. We'll just continue to assess things as we continue to move along. Now, on the year, again, we did trigger the 1 2 up 2 down. So we did see that we put in a higher low, right, reaching only that 723 in the April low. And we have turned the year back around. We're green on the year, not so much a hammer anymore, but more of a fat doji on the year candle. So we want to continue to at the very least keep that green, right? Give us our best chance of going 2 up in 2026. That way we could target that 70.08 level ultimately in 2026. All right. So there you have it, the triggers and targets for everything from scalping all the way up through the 1-day chart. Sorry if there was any confusion there on the day triggers and targets, but they're there and they're correct. So if you need to go over anything again, just hit that rewind button. But we'll go ahead and end the video like we normally do. I hope that if you are watching this on Tuesday night, you get some good rest and wake up refreshed on Wednesday. If you're watching this Wednesday morning, we hope you got some good rest Tuesday night and you woke up refreshed this morning. And we look forward to getting out there and trading with everybody.